Namaste and welcome. I am Pratim Ranjan Bose and you are listening to my podcast Perspective. In this episode, I'll share my views on why and how the latest round of turmoil in the Middle East may add to the worries of the global economy. While Indian economy is largely insulated from short-term risks, the long-term concerns remain. The Hamas-sponsored terror attack on Israel and the following turmoil in the Middle East have added to the worries of the global economy. The sharp 3.2% decline in global trade volume and the spike in crude prices, which is now nearing $90 a barrel mark from roughly $70 in June, have raised fears of a global recession. As of August, the Purchasing Managers Index in the US and Eurozone were either in the contraction zone or on the verge of it. And it was barely positive for China. As you may know, a PMI of below 50 is considered contractionary. Considering the recent uptick in global inflation and anticipation of further rate hikes by the US Fed, the economic outlook is not encouraging. Bain and Company pointed out the elevated likelihood of a recession in the US and Eurozone. Bain brings out recession watch regularly. Global trade has been weak for some time. For India, the slowdown in merchandise exports was compensated by a shift in demand for services. The trade balance declined from $60 billion to $37 billion during April-August this fiscal. The looming uncertainties may disrupt this trend, potentially putting pressure on the forex reserve. The current account deficit, largely influenced by the energy import bill, may temporarily rise, leading to oscillations in rupee-dollar exchange value. Fundamentally, though, India has fewer reasons to worry in the immediate run. It is less dependent on the export economy. Consumer confidence is stable and should ensure growth momentum. The core sector growth reached a 14-month high in August. A large domestic investor base through mutual funds insulates the capital market from wild variations due to the potential exit of foreign investors due to interest rate hikes in the US. On the flip side, the global economic turmoil, if any, could coincide with the election season in India. The political uncertainty may keep private capital expenditure and foreign direct investment muted during the first half of 2024. The long-term prospect of India will therefore depend on the election results, which is expected in May 2024, and the policies of the next government. To understand the evolution of the current problem, we have to track back to the pandemic and the Ukraine crisis. Global trade reached an unprecedented high between the third quarter of 2020 and the second quarter of 2022, driven by huge cash handouts by the developed West during COVID. A spurt in demand coupled with supply chain disruption, largely due to prolonged lockdowns in China, triggered inflation. The Ukraine crisis added another dimension to it. Crude petroleum prices reached a 10-year high on June 6, 2022. High petroleum prices and high inflation impacted the purchasing power of the global economy. To combat inflation, the world, led by the US, took recourse to a tight money policy which further impacted consumption. As a natural corollary, global trade developed weaknesses beginning the second half of 2022. On the brighter side, crude prices declined throughout the period before stabilizing at around $70 a barrel during the second quarter of 2023. The monetary policy measures and the low crude prices helped the global economy to tame inflation. But just when the global economic outlook turned a little optimistic, the Organization of Petroleum Exporting Countries or OPEC announced a cut in production. OPEC suffered major revenue loss during the pandemic when oil was selling at $25 to $30 a barrel. It is now trying to maximize its export revenue. The impact was imminent on the global economy. Between June and August 2023, inflation rose from 3 to 3.7% in the US, creating space for more rate hikes. The rise in crude prices are yet to impact India's domestic economy in a significant way, as the government adopted a levelized tariff mechanism at the retail end last year to navigate through the global uncertainties. India raised pump prices of auto fuel during the June quarter of 2022 and kept it unchanged there. It means consumers may be spared from an immediate hike in fuel prices unless crude breaches the June 2022 level. Predicting crude price movement is a futile exercise. However, that the production cut was implemented ahead of the winter stocking season in the West, there is fear that crude may rise substantially. Having said that, India has a new set of problems to address. In 2022, India sourced crude from the sanction-hit Russia at a deep discount. The two countries also revived the rupee-ruble arrangement to reduce demand for the US dollar. Both the advantages are now substantially reduced. The tightness in the global market helped Russia to cut discounts to a minimal level. It means the average cost of India basket crude is set to be higher this time. Meanwhile, Russia refused to accept payments in rupee. The problem is old and genuine. Ruble is an international currency, but the rupee is not. Moreover, as a net exporter to India, Moscow is saddled with a pile of Indian currency. Between 2021 and 2022, India's imports from Russia had shot up by more than 4 times to roughly $41 billion. The trade balance increased from roughly $5 billion to nearly $38 billion in Russia's favor. It means if India and Russia trades through the rupee-ruble trade arrangement, Russia will end up with roughly $38 billion of Indian currency, which has no use because it is not tradable in the market. To put it otherwise, India will therefore require more dollar for buying the same amount of crude at the same price this year. That being almost certain, there is one unknown element in the whole story. We all know that India and Canada have been engaged in a diplomatic row for last couple of weeks. Likely, it would impact the trade to whatever extent possible. India-Canada trade is in India's favor, and Indian exports to Canada grew by 45% between 2019 and 2022. The growth was most robust in manufacturing items. The Israel crises have taken place on top of that. We are yet to know what would happen to Israel's demand profile. However, as of 2022, India exported roughly $7.5 billion worth of goods to Israel with a positive balance of roughly $5 billion in India's favor. The exports grew by more than double since 2019. It is not known how the India-Israel trade would behave in the aftermath of the current situation. What is apparent though, that there is high possibility that the horrifying attack and the counter-offensive by Israel may have a defining impact on the Middle Eastern politics. How that impacts India's fortune is to be seen. India has a lot at stake in Israel. Thank you for listening to Perspective. If you like this episode, please share and subscribe. फिर मिलेंगे.